Morning everyone, I hope everyone is doing well. We are the representative from the financial department. My name is Natrah. My teammates are Maisya, Noreesa and Atiqah. Does everyone have a copy of our report presentation? Okay,
Yes.
And let's get started. As for today's session, we'll be reviewing the financial performance of two companies, which is TGL, Guan Corporation and Cheetah, where both companies will be taken into consideration for our company's investment. As for the introduction, will be presented by Noreesa and Maisya. The 5 main ratio will be presented by Maisya, Atiqah and Noreesa. The SWOT analysis will be presented by Atiqah and me, and as for the conclusion, will be presented by Maisya, Noreesa and me. Okay, let's start with the introduction for both companies. So I welcome Miss Maisya and Miss Noreesa.
So, I'm going to introduce to you the first company on our list, which is Guan Corporation Berhad. Okay, who is Guan Corporation Berhad? Guan Corporation Berhad is a Malaysian investment holding company that manufacture, market, distribute, and retail apparel and related accessories. The company's brand include Kikilala, Garfield, Baby Tom and Jerry, and Cuddles, and another brand of sportwear named Prosonic. Okay, this company was established in 1934 and was first listed in Bursa Malaysia in 1994. The company's subsidiaries include Guan Kuala Lumpur Sdn Berhad, Guan Pulau Pinang Sdn Berhad, Eflon Lasta Sdn Berhad, PPACM Sdn Berhad, and Galeri Mekah Sdn Berhad. Okay, we proceed to the second company on our list, Alia Noreesa.
Okay, so for the introduction for Cheetah Holdings Berhad, okay, this is the logo of Cheetah Holdings Berhad. Cheetah Holdings Berhad has two subsidiaries, which is Cheetah Corporate M Sendirian Berhad and Cheetah Marketing Sendirian Berhad. And this is all Cheetah brands, which is Cheetah Sports, Cheetah Junior, GQ Cheetah, Cheetah Ladies and Ladybirds, which is for the babies. And on January 2005, Cheetah Holdings Berhad listed under second board of Bursa Malaysia, and on July 2007, Cheetah Holdings Berhad transferred to main board of Bursa Malaysia, and it is under consumer product and services sector, and it is a Sharia compliant company.
In this video, I would like to increase our comments on why we chose TGL Corporation over the Cheetah Holdings Berhad. Based on the profitability ratios analysis we've made, the gross profit margin of TGL Corporation is higher than the Cheetah Holdings Berhad. This shows that they have made profit out of the inventories and also the labor they had in the TGL Corporation itself. The operating profit margin is also higher in the side of TGL Corporation compared to Cheetah Holdings Berhad. This shows that even though the calculation is where we less the inventory, it's still the TGL Corporation has higher operating profit margin than the Cheetah Holdings Berhad. The net profit margin before and after the tax is higher in the side of TGL Corporation compared to Cheetah Holdings Berhad. There we can see that even though there are taxes and there were no taxes being paid by the TGL company, it still can produce a high revenue. This we can see that they are having a good financial management in its company itself. However, the liquidity ratios we found through our analysis we made is that the current ratio in the Cheetah Holdings Berhad is higher than the TGL corporations. This shows that the Cheetah Holdings Berhad has a higher liquidity, and based on the quick ratio, the account receivable turnover ratio and the days, the account payables turnover ratios, and also the days win over in the side of Cheetah Holdings Berhad. However, TGL Corporation wins in the side of inventories turnover ratio and also the days. This shows that the inventory turnover ratios in the side of TGL is higher than the Cheetah Holdings Berhad, which means that the money is less tied up in the company itself, and also it always meets the demands of the customer. And also we can see that the inventories in the side of the TGL corporations, they hold less obsolete goods. And the stock turnover this is where the TGL corporations are able to sell off its inventory at faster rate than the Cheetah Holdings Berhad itself.
So, in terms of leverage, I can say that both of the company is in a good condition since they doesn't burden by the debt. But I can strongly suggest to you that TGL is more better than Cheetah. This is because, as you can see on the table, Cheetah debt ratio and debt to equity ratio is very low. That could indicate that Cheetah doesn't use their earning that leverage neighboring to further grow or expand their company. So we, as the investor, doesn't want a company that just waste their chance just like that, as we have invest our money in it, right? And I also can say that TGL is more capable on covering loss and damage if unexpected economic condition happen in the future. So I can say that it's more safer and secure for us to invest our money in TGL compared to Cheetah. So we proceed to Alia and Noreesa.
For the efficiency ratios calculation, okay, the first one, earnings per share. This is the calculation for earnings per share for both companies. Okay, so this means for every one ordinary share, shareholders of TGL company has earned 15.40 cent of income, and for Cheetah Holdings Berhad, for every one ordinary share, shareholders of Cheetah company has earned only 0.27 cent of income. It not even reach 1 cent. So this showed that TGL Corporations has a higher earnings per share than Cheetah Holdings Berhad. For the next is return on capital employed. This is the calculation. Okay, so this means the firm will get a return of RM 0.90 cent annually for every RM 100 of funding, and for Cheetah Holdings Berhad, the firm will get a return of only 0.30 cent annually for every 100 of funding. And this should also TGL Corporation has a higher return on capital employed than Cheetah Holdings Berhad. Okay, so next, return on assets. This is the calculation, and this means the management of the firm will get a return of RM 5 ringgit 41 cent for every 100 of assets that firm invest into this company. And for Cheetah, the management of the firm will get a return only 0.24 ringgit for every 100 of assets that firm invest in. So this should also TGL is more higher return on assets than Cheetah Holdings Berhad. So for return on equity and return on ordinary equity is the same for both companies, because both company doesn't have preference share. So the calculation for two ratios is the same. Okay, so this means the shareholders of TGL company will get a return of RM 6.77 for every 100 they have invested into the company. And for Cheetah Holdings Berhad, the shareholders of Cheetah Holdings Berhad will get a return of only 0.25 ringgit, which is 25 cent, for every 100 they have invested. This means if the shareholders give 100, if they have invest 100, they will only get 25 cent for Cheetah Holdings Berhad. This also shows that TGL Corporation has a higher return on equity than Cheetah Holdings Berhad. Okay, for market ratios, okay, the first one is P/E ratio. This is the calculation for TGL Corporation and Cheetah Holdings Berhad. This means TGL company's shares currently sell for 6.49 times of its earnings. This means the investors willing to pay for RM 6.49 ringgit for 1 ringgit of earnings. And for Cheetah Holdings, Cheetah company's shares currently sell for 103.07 times of its earnings, which means investors must pay 103 ringgit for RM1 earning. Although the Cheetah Holdings Berhad is high PE ratio than TGL Corporation, but it is meaningless because Cheetah Holdings Berhad has a very low earnings, which is only 0.27 cent. It even not reach 1 cent. So for example, if the Cheetah Holdings Berhad have 10 cent of earnings, the investor only must pay only ringgit of 10 ringgit 0.3 cent only. So it is very meaningless because the Cheetah Holdings Berhad has a very low earnings. So for market to book ratio this is the calculation for both companies. Okay, we conclude that TGL Corporation have 0.4493 and Cheetah Holdings have 0.2506, which is both values are less than 1. This means both companies is the stock of both companies is undervalued and it is fail to create value for the shareholders. But in terms of the comparison, Cheetah Holdings Berhad is more lower value than the TGL Corporation. So that's all for market ratio and the efficiency ratio. But this show all show that TGL Corporation is better than the Cheetah Holdings Berhad.
Thank you, Ms. Norris, for the explanation of efficiency and market to book ratio. Right now, I'll be explaining the strength and weaknesses for both companies. TGL started their business in 1934 and Cheetah started in 1979. This shows that both companies have good sustainability for a very long time. Number two is we can see that TGL sells various garment products such as sports apparel, casual wear, accessories, and many more for children. The consumer, particularly parents, will have a lot of choices. As for Cheetah, they have various target group. They want wider range of consumers' age. And number three, we can see that TGL possesses 2 house brands and 8 characters for their products. These characters are licensed brand from the USA, so we can say that TGL has a relationship with the international market. And number three, we can see that Cheetah has 2 awards in 2005 and 2009. The company shows a good quality. TGL also listed on the second board of Bursa Malaysia, and their directors are experienced in corporate marketing and accounting. However, we can see that Cheetah directors has experience with more different backgrounds such as designing, retailing, management, accounting, and a few more. But overall, we can see that TGL has 45 years more experience compared to Cheetah. Both companies also ensure the quality of their BOD performance by maintaining unbiased decision making, particularly in Cheetah, which is a family business. Overall, we can see that TGL has almost the same quality and strength compared to Cheetah. Okay, let's continue. As for the weaknesses, TGL does not constantly pay dividends to their shareholders, but Cheetah has unstable profit. As an addition, both companies are not strongly involved in e-commerce. And number two, we can see that TGL has great designs in their apparel, but Cheetah designs need to be improvised. And number three, we can see that both companies also need to step up their strategies on marketing by referring to famous apparel concept stores. And lastly, we can see that TGL has a weak financial capacity when it comes to market control. So, in order to maintaining their strength and managing their weaknesses, both companies need to take more effort. So, yeah, I think that's that for the strength and weaknesses, and we'll continue with threats and opportunities with Ms. Atiqah.
Opportunities and threat, we found few comparisons can be made on both companies, where on the side of TGL for opportunities, we found that it has to upgrade product designs and styling in accordance with the current trend. And also the Cheetah Holdings Berhad is where it is advisable for the designers to refer to fashion collections with the well-known garments in order for the company to increase their ideas and preference on what should the products should be sold in the market itself. And also for the second opportunities on the TGL corporations is where the firm should be producing products for another age of group. This is not only the toddlers but also referring to the teenagers and the adults, and it has to be accordance with the licensed brands they are having. The second opportunities on the Cheetah Holdings Berhad, we can found that the marketing team should be improvising on the marketing strategies. This is to ensure the financial management is on track, and also the companies are able to increase their revenue out of their inventory. The threats we found on the TGL corporations is where they face unpredicted external causes such as the economic downturn. This economic downturn, we are referring to the market fall. And for the threats faced by the Cheetah Holdings Berhad is where they got some changes in the government policies on the sales and services of tax. For the second threats, we found that on the side of TGL corporations, where the competitors have better distributions with more sales price, because the competitors in TGL companies are referring to the Malaysian seller. However, for the threats on the side of Cheetah Holdings Berhad, where the direct competitions and the international competitions are seenable, because like we can see Cheetah Holdings Berhad are found all over the globe compared to TGL where it is only found in Malaysia itself. So all in all, we found that the SWOT analysis made on the side of TGLs win over the Cheetah Holdings Berhad.
So we'll be moving on to the future general financial condition for both company. So if we're talking about the future general financial condition for the both company, I would say that Teo Guan Lee Corporation, it would have much brighter future than Cheetah Corporation. We can see this from the 5-year financial highlight from the annual report for the both company. So if we see the Teo Guan Lee Corporation, we can see that their earning and profit have been stable and inclining for the past 5 years compared to Cheetah, which has been declining year per year for the past 5 years. So we expected Cheetah earning and profit to be declining also for the next few years, but we expected Teo Guan Lee to stay stable or declining in the next year. This can be supported by the ratio analysis that we have presented earlier. TGL profit margin have a very high ratio compared to Cheetah, and they are also very efficient in getting return to the company for every capital, equity and asset invested to the company, compared to Cheetah that getting below 0 cent for their efficiency. So as the investor like us, I would say that more investor in the outside will be attracted to invest in TGL company compared to Cheetah. So as for the leverage and the liquidity, TGL has more advantages in the leverage area, but for liquidity, they have quite the same level in liquidity of the cash flow. So if TGL improve their liquidity in the future, I would say that their financial condition will much better than Cheetah Corporation. If we see from the market ratio, we also can say that Teo Guan Lee is much further better than Cheetah Corporation. And since even though Cheetah has higher ratio, but their earning make the ratio meaningless for the investor like us. So here, I would say that Teo Guan Lee Corporation will have much greater and brighter future in the financial condition compared to Cheetah Corporation that I expected to go declining for the next few years. So I suggest our investor to invest in Teo Guan Lee Corporation as they have more stable and inclining earning, so that our investor will be safe and secure and will be earn more profit. So that's all. We continue to Natrah.
Thank you, Ms. Maisya. So, of course, all of you want to know which company has the ability to further grow and be more efficient in generating future returns. We strongly suggest the answer is TGL. In our opinion, we think TGL can accomplish both. Based on the profitability ratio, the company gains high profit margins. Excuse me. Not only it is a profitable firm, but the firm managed to generate a good amount of profit by using the firm's capital and asset. Based on the efficiency ratios, the earnings per share for Cheetah is lower than TGL. This means Cheetah earns a low return to its capital, assets, and equity. Investors will receive lower returns. And if you look at the SWOT analysis, Cheetah has the ability to grow the company, but slowly. It is mainly because the design, marketing, and the e-commerce problems are improvable. And to grow their companies, they really need to take actions and steps and more efforts in upgrading their products so that their profitability may increase in the near future. So yes, we think that TGL Corporation is a better choice. And let's continue with Ms. Noreesa.
Okay, so for the conclusion, which companies is worth to be invested by our company is, we believe it is Teo Guan Lee Corporation Berhad, which is TGL company. Okay, why? The first one is TGL has been recorded stable and inclining profit for the past 5 years based on from the financial highlights on the annual report of 2019. Okay, next one is TGL is a safer company to be invested in. Why? Because based on Maisya's explanation on interest cover ratio before, it proved that TGL company can cover more interest payment for the extra debt to grow the company in future, and it also can cover the fund when unpredictable conditions happens in future, such as what are happening right now is COVID-19 issues. That is unpredictable condition. So the TGL company can cover the funds while the situation happens. That's why it is a safer company to be invested in. Okay, next one is TGL gives more advantages to the investors than Cheetah. Why? Because based on my explanation before on ratio analysis, it proves that TGL company has much higher earnings per share than Cheetah. Next one, TGL's assets more liquid than Cheetah because based on Atiqah's explanation on liquidity ratio before, it proved that TGL company can change the inventory to sales much faster than Cheetah company. And TGL's profitability is more secured than Cheetah. Why? Because based on the profitability ratio that explained by Atiqah before, TGL's company overall for profitability ratio calculation are much higher than Cheetah company, and so it can manage to minimize cost of goods sold and maximize the profit. So this is the main to gain more profit. So this is why TGL is more better company to be invested in. And the last one is management of TGL has efficiently ensured to earn sufficient returns, because based on my explanation on efficiency ratios before, it proved and it showed that TGL company has a much higher returns to asset, to equity, to capital than the Cheetah company. So that is why we choose TGL more than Cheetah company to be invested in. So we believe and we hope our board of directors understand our presentation and choose TGL company, Tuo Juanly company, for our company to be invested in. Thank you.
Thank you, Ms. Noreesa. Okay, to sum it up, my team can say we agreed to our conclusions, yeah?
Yes.
Good. I hope our informations reviewed in this meeting will be considered by all of you to invest in the Tuo Guanly Corporation. So, okay, we agreed to establish flexible duration within 20 minutes for this meeting. I think that's all for today's meeting. So, thank you.